Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. Generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive in there and take a look, see what people are sharing, and I'll share my opinions with you. If you want to follow me at Finance Score Finance, if you want to join our community, finding-value.com, I dive deeper into all these topics, subjects. You can ask me questions directly during the question and answer sessions that we have during the weekends, or you can send me through the contact information on the website questions that you want me to answer, and I can answer those during those question and answer sessions if you can't make it. So, starting with Tavi, we've got everything seems obvious when we look back at history. That's the beauty of hindsight research. It's interesting that despite the similar valuation characteristics of prior speculative environments, the prevailing opinion today is that this is not a bubble. Regardless of how much is left in the tank, the risk reward of being heavily invested in US stocks seems entirely imprudent at this point. And I would completely agree. A lot of people, what they do is they look at the history, they look back 10 years and they say, well, what is the returns of an asset for 10 years? It's not the way you look at it, guys. That is definitely not the way you want to look at things. What you want to look at is you say, what is the valuation of an asset? Warren Buffett doesn't look and say, oh, well, this stock went up 25% the past 4, 5, 6 years. He wants to buy something that's undervalued. So the CAPE ratio, when looking at history, is that when you get above certain levels, above 25, let's say, when you get above 25, you're in bubble territory. The risk reward changes unfavorably for US stocks. And I don't even want to mention what the international / emerging market stocks look like. They're cheap as can be against US stocks. So when you price US stocks against anything else in this world, it could be the M2 money supply, it could be against gold, it could be against commodities, it could be priced against their earnings. In this case, this is the cyclically adjusted price to earnings ratio. It doesn't matter what you price it in, it's stating it's overvalued. That is where the risk is. Buying things that are overvalued is risky because you can get these big corrections after all of these big pullbacks. And with the yield curve inverted too, man, this is not stacking up for a good investment opportunity in US stocks, in my opinion. Eric Nuttall says, we have for several years believed that the compounding effect of meaningful share buybacks would lead to an inevitable re-rating of energy company valuations. Given just how valuable the last theoretical remaining share would be, we have championed this philosophy aggressively, and it is gratifying to see that we are in good company. Given that most companies have just recently hit their final debt targets in the past quarter or so, they're pivoting to 75 to 100% of free cash flow going to return of capital. I believe we have yet to see the real impact of buybacks on valuations. And what he's referring to here, Charlie Munger, and he was talking to Charlie here, and obviously he brought up Oxy. And what they don't want is they don't want a company that's going out and trying to expand production necessarily, willy-nillying, just spending money all over the place. What he wants is he wants the company to buy back shares or pay in dividends. And that's what Warren Buffett and Charlie Munger were looking for in an energy company. We are starting to see the Canadian energy companies do a lot of this, which is really good for shareholders. And I'm very excited for the opportunity to be involved with a lot of these Canadian companies in their investments, in their stock, and this commodity bull market that we are in and is going to accelerate after whatever slowdown we see kind of goes behind us. Here's JH. U.S. commercial crude stocks are approaching minimum operating stock levels. The U.S. cannot continue to provide crude to global markets without stock draws, and with WTI spreads rallying, it must either curb exports or pull global crude into the US through more imports. So he's saying that commercial crude stocks are getting to the low end of the inventory level, and that we're going to basically, price really needs to move up, is what he's saying. So here's working storage. You can see that working storage is kind of squeezing up a little bit in terms of the distance between here and here. This is pipeline fill and crude in transit and not working. If this gets too low, we could have problems with this working here. Coming down to Cuppy, he says, want to know where sentiment currently is on energy? Interactive Brokers just ran out of XOP shares to short. According to Bloomberg, there are 12.3 million XOP units short out of the 19.8 million units outstanding. Units recently peaked on April 15th at 28.3 million, so a complete liquidation since then. Can always get more lopsided, but wow. Kim Benny, he says, and we're drawing global crude inventory fast. So looking at this, I know we've got a lot of lines going across. The one you want to focus on is this one right here in August. It's at the bottom there. That is 2024. The big move lower in 2024, and this is below all of the years going back to 2017. Obviously, 2020 had a lot of inventory. That's when oil prices went negative for a short period of time. But we're down here, guys. What is going on? How can we be so low on inventory, but yet so low on price? Well, what I can say is it's an opportunity, what I'll say. And if we continue to draw, I'm willing to bet that prices will have to go higher. Zayad says there's 3 takeaways from the Saudi budget data in the first half of 2024. Saudi needs oil at $95 to balance its budget. Adding domestic investments by the Sovereign Wealth Fund, the figure rises to $112 a barrel. Oil price is lower than that at 77, meaning deficits will persist. So this is just saying that they need 95 to balance the budget, or 112, including some other things put into it. So they are highly motivated to bring that price higher, above that 95 at least a barrel, probably approaching in the low to middle $100 per barrel range is where they really ultimately want to be. Here's Grady, and this is an interesting chart here, which I take to heart. It says this ratio chart is now moving as expected. It would. The chart says it's time for precious metals to shine. You can post this chart now as think it has turned inside the massive blue triangle for the last time. The oil sector leads the commodities baby bull move up from the bear low in 2020, which I call real time. The move in precious metals miners have really only just begun. The charts are now set up to climb the right side of a huge rounded bottom. Most will not get into a bull market mindset until too late, though. So be one of the few that catches the whole move, the move of a lifetime. So this is the Huey, the Gold Box Index, divided by XLE, which is the ETF Energy Select Spider Fund. And we've been moving up and down against each other. We had a vast outperformance of gold in 2001, that slowdown that occurred in 2001. The slowdowns are where we get these big moves higher. And what this is projecting is that we are getting a slowdown in the market. It has started, and we could see it further progress. So precious metals do well when the yield curve is inverted. It starts to uninvert, and then it uninverts. We get inflation or a stimulative impulse move back in the system. They get one last big push higher. The precious metals mining companies generally do, and the metal itself. Then it will peak, and then it's oil's time to rip. So I think we will go back up here, and then it will turn back down eventually. Right now, what's in favor is precious metals mining companies. Here's gold. Posted this chart last year. The signal it gave was correct. So US dollar index versus gold, it's breaking to the downside. So what does that mean? It's the DXY divided by gold, and whenever you have that outperformance, you get these big bull markets. It occurred in the 1970s all the way till 1980. It occurred again, another big breakout of this from 2001 all the way down to 2011. And we just broke out here recently, basically today for the past few days. So we are starting potentially a huge bull market in gold and precious metals here. Looking fantastic. Here's another one from Grady about the Huey. He says, did you doubt the blue historical breakout back in 2001? Do you doubt the blue historical breakout happening right now in 2024? It says some decisions in life are more important than others. He says, is it time to revisit the upper trend line of the channel? In his opinion, I think it is. So this is the Huey, the 25-year chart for the gold miners. From 2001 onward, we went up 1,250% in the Huey. And what he is saying now is that we are probably going to do it again, 1,250%. And I did buy the bottom of these here, guys. Because we bought the very lows heavily at the service, different company categories at the two different lows. And that's what we're seeing right now and what he's expecting in the gold and silver mining companies. Big move. Get on it. I know a lot of us in the community are on this. We are riding it together. And I think we've got some of the best companies with the best risk reward out there. Very good chart patterns too and fractals in a lot of the companies. Here's gold and gold miners as a percent of total global assets. The money is not there. It's not in gold and gold miners, guys. Now, will it come back to these levels up here? I don't know. But if we go anywhere higher, I'm sure it will be multiples higher from where we are today at the big 1% area. In July, Brazil experienced a sharp rise in iron ore exports. With a total of 39.3 million tons exported, this represents a 24% increase compared to July of the previous year. When compared to June, iron ore exports in July rose by about 19%. For the year to end July, total iron have reached 219 million tons, reflecting a notable 9% increase compared to the same period last year. So here we are with iron ore exports from Brazil heading on higher. And you guys know what I mean by steel and iron ore, the companies. We've got it covered here. Don't worry. Another big deal is this DXY that's breaking lower up here. That's going to be good for emerging markets. Christine says, slowly, my prediction from last December becomes consensus. Permian flat, the drilled uncompleted bank declines, efficiency gains are in the rear view mirror. So that is also coming true. Good work there. We've got money wisdom. The more you learn, the more you'll earn, says Warren Buffett. And Naval says, free education is abundant all over the internet. It's the desire to learn that's scarce. Another one from Grady. He says, I now think silver's catch-up move has started. Very big picture, there's a massive divergence between gold and silver. Last time the two had a larger divergence like this, silver played catch-up big time. And this time, silver will break out of a 45-year cup and handle. So the overshoot this time should be absolutely mega. And here's that divergence. You can see that they trade and you can get these gaps in between. These divergences, like in 2009, we had an ultra move up and an overshoot. And now I think we're going to have an ultra move up, which is a huge divergence, and probably an overshoot in silver. Now's the time to be bullish silver, not when it's already moving. I was bullish even before the breakout. I've actually purchased some all through this bottom here on some of these companies. Absolute bottom picker. I love it. Here's Tavi. He says, what if I told you that junior gold miners have outperformed the NASDAQ 100 over the past year? This industry is so despised that people have a hard time believing it until they see the data. So here is junior gold miners outperforming the NASDAQ over the past year. Nobody would expect that. That's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you're interested. Mayday coupon still active. And that's all I've got for today. So we'll catch you next time. This is Finding Value.